Yeah. Hello, Munchkins. Hello. I am Menace, and this is a report straight from the garage. Welcome. It's my first market report slash observation. Actually, it's a market observation. If you want to have a real market report, you shouldn't listen to a guy in the garage. You should actually go and listen to real veterans about markets. One of which could be Crowded Market Report with Jason Shapiro. Great guy. Knows a lot of stuff. Also has been a what do they call him? Market wizard. Yeah. Real market wizard. Go watch his reports. That's the real market report. This is just a observation from a little guy who has a bit of an experience in trading. As you saw by the first slide, I'm what am I doing? I'm trying to get people to involve them into my little day trading fund. In case you're in London, you're local, please feel free to hit me up. Anyone actually, feel free to hit me up. The QR is there for the email, and you can also DM me. Without further ado, let's look at the markets. Let's look at the markets on everyone's favorite website called Finviz. Yeah. Okay, let's look here. Let's see what the little guy has to say from his little garage. All right. Markets. What do we see? There is a lot of them. But the most important is this little baby. Sorry, I don't have money. This little baby, and we're doing it weekly. So, nice little trend up ever since 2020. That thing we observed in 20. I don't know what this is. Finviz is clearly, people at Finviz have smoked something today or this week. But yeah, this is the market. What do we know about the market? There's only one thing you need to know about the market, and that is precisely more about bull markets. And bull markets are they're born in pessimism, they grow in disbelief, they mature in optimism, and they die in euphoria. And your job, if you want to trade or involve yourself in the market, your job is to recognize which stage you're in. And that's hard. It's easier if you have people like Jason who talk about frenzy and euphoria. So check him out definitely. Crowded Market Report. It's also on YouTube. For others who are more of a readers, you can check market. You can check Robert Schiller, Professor Robert Schiller from Yale. He wrote Narrative Economics, because markets are largely driven by that narrative, because we're people, and people is who invests into the markets. So narrative is a key. Otherwise, just ask around. Who knows? Are we in disbelief? Are we in euphoria? Nobody really knows. But if you ask professionals, they might be able to give you some good perspectives. Now, born on pessimism, grow in disbelief, mature in optimism, and die in euphoria. Let's look at our favorite market, which is S&P 500. S&P 500, ironically called Standard and Poor, because yeah, poor, why not? And famously doesn't have actually 500 stocks. It has 505 or 6 stocks. So not everything is true in the markets. Lots of lies. For example, right here, right now. What is this? Interestingly, anyways, S&P 500. What do we know about it? Peas, schmees. What do we know about it is that phrase holds, and when they die in euphoria, they kind of reset. And when markets reset, it's like breathing. They inhale and then they exhale, and then they inhale and then they exhale, and on it goes. So it's a process of exchange. Okay, there's an exchange, but what is the real exchange here? What are we exchanging? We're just exchanging actually narratives, perspectives, and then this thing either goes up and goes down. This thing goes up and goes down on 2 rules. Rule number 1, it's a 2-way auction process. So just like with paintings, when auction, when you sell something in an auction, the price goes up and the guy hits the hammer and it stops. But in markets, when the guy hits the hammer, another guy starts auctioning it down. He's gonna auction it down until he hits the hammer and somebody offers the lowest offer. Okay, so it's a two-way auction process. And also, for those who are traders and read Jim Dalton, trading is largely based on price, and price is an advertising mechanism, and that, my friends, is very important. Why? Because in order for markets to be cyclical, they have to do something. They have to slash prices. Okay, so markets go too much up, Tesla goes too much up, Amazon goes too much up. For those of you who are new in the markets, Amazon and Tesla have actually been around 1500 already, and Amazon was around 2000. But what they did is that they did the reverse stock split. That's when, in my opinion, price becomes too psychologically high and you have to slash it. Just what Nvidia did after 1200, it slashed it to 120, right? 1 to 10 stock split. So why is that important? That's important for the psychological factor. So when the price is too high, it's being cut. So you are not seeing the real price, ladies and gentlemen. Price always changes. Okay, that's first thing about markets, the reverse stock splits. And the second is how to identify at what stage of a market are you? Is it gonna go up? Will the number go up? Will the number go down? Well, here you have to understand that in S&P 500 and in American markets, the largest players, they have this they have this one important factor that not a lot of people count in, which is corporate buybacks. Corporate buybacks is one of the strongest and most bullish signs and most obvious signs that one must expect or must see for stuff to go up. When we look at this chart, what do we see? We see on our daily that, or should we go weekly? Oh no, daily is still nice. Daily is still nice. Although, let's go for a bigger picture. Let's go on weekly. So what do we see? We see it went up, number went down, and then somewhere here, something changed in the end of November 2023. This is where we had the gilt crisis, September, but Then this happened, bonds had some pain, and then in November something flipped. But what did flip, guys? What flipped, ladies and gentlemen, is this. Let's check the date. Wednesday, November 29, 23. This was one of the first announced buybacks on the market. Okay, GM initiated 10 billion buyback. When this stuff happens with such a big company as GM, you have to understand they have a lot of money. Companies are not suffering, and they need to do something. They need to satisfy their shareholders. The only way to satisfy it is to make their own number go up, because they, as everyone else, know it is a fugazi. There's a lot of pumping. Let's admit it, inflation numbers were largely manipulated. So yeah, corporate buybacks. Corporate buybacks is the biggest green signal. Once it started, see where it went? Ooh, it went very high. Now, everyone is expecting that we're either in everyone is actually saying that we're in euphoric stage of the market. But trading is a two-way auction process, and there is no way to know when the auction will finish. Somebody might hit $35. The guy will say 35.1, 35.2. Somebody from the back of the room will say $45. And you never know who or when that guy will act. So, okay. Now we know everything you generally need to know about the markets. Now let's look. Dow Jones, S&P, technicals, rot. Look. Down. This one went up. Why did this one go up? Is it something special about Russell 2000? No. It is a gutter of stock market. It has shittiest companies. But why does it grow? It's because when these things go down, okay, they fall out of indices. They fall out of various components. And when they fall out of various components, they fall into the gutter. And the gutter goes up. So, hence the move in Russell. Next, we have an unfortunate move in the Nikkei from the July. We don't know what's doing. There's a lot of currency manipulation on the Japanese yen side. So Nikkei, no idea. Europe, sorry, Europe just stays same way from February. Thank you, Europe. Intel's understanding it is a kicking of can down the road. DAX, Germans are doing pretty well. They have a lot of Mittelstands, which is small and medium-sized organizations. That's very nice. So Germans are very driven, but again within the European Union, so that stuff is dragging them down. VIX is a beautiful thing. It's a volatility indicator. Everyone wants to trade it, but not many understand it. I will not claim that I do understand it, but I say that a few people that do is, well, one of them is Chris Sidiel. If you want to know anything about VIX or how it moves, definitely check him out. He will explain you the VIX and these sharp movements. There's rebalancing, lots of stuff. But again, an auction process. Here is where we're actually interested. These four. Crude, baby. Crude never goes anywhere. A lot of product need crude. And crude has an excellent indicator for world economy. This was noticed to me a few years ago when I watched an interview of Paul Hodges, and he said that there is a funny level about crude when Brent, I don't remember Brent or WTI, if either of them passes $84 to $86 mark, it starts being heavy on the world in terms of operations and exchanging. Once that becomes heavy, stuff becomes inflationary, okay? So you don't want crude to be around $84, $86, which is nowhere near, okay? This balance is nowhere near. It's sold through that level. and that's again another I would say it adds to the bullish momentum of the market rather than bearish. So oil, very important on my watch list. Natural gas, yes. Gold has gapped up yesterday. I don't know how much, about $50 maybe. That was a sharp move. However, gold is an old narrative, okay? It moves together well with inflation as I guess as a hedge. But this gap down is also a big risk factor. So there are geopolitical factors involved in the world right now, as you know, with Lebanon and with just the Middle East is a big problem now. So gold, I feel like it has to do with that. Also, according to Robert Schiller, narratives drive markets, and narratives can intertwine with each other. Gold was an old narrative, and there's a newer narrative that came with gold, which is Bitcoin. However, if you give more attention to Bitcoin and its narrative gets it gets more powerful. If gold gets more powerful, if Bitcoin gets more powerful, then gold will subsequently get also powerful, because they're both now viewed as a store of value, similar to silverite, yada yada. But this is the top. So if one store of value has a very good, very strong narrative, and another store of value is there on the offer, it might catch the narrative. And you know how they say Bitcoin is digital gold, and after the presentation and everything, well, not presentation but the conference, it's safe to buy both types of gold, both digital and physical. Now, looking next, what do we have? This I pretty much don't look at. Soybean quart. Lumber, sugar, treasury notes. Yes. What do we observe? We observe a steady grind up. They're just, number goes up. Treasuries go up. Well, rates will go down. Market will go up. It will be bullish. There's a magic of discounted cash flow on the market. Discounted cash flow models, they involve a lot of they all involve interest rates. So this thing goes down, you gotta expect these things to go up. And lastly but least, we have the currency basket, FX market, large. It's basically where do you exchange money when you have a trade, global trade going on. Everything will be all right. Global trade has a problem, we have supply disruptions. Well, these things will have a problem against this, because there will be risks involved in the market, and everyone will jump to the safer currency because they know trade is bad. And in a very sophisticated models, when trade goes down on a very high level and there's a risk of that, a war starts. So a good indication of a dropping trade level is a geopolitical tension. Okay, that's about it. That's about everything you need to know about markets for today. About S&Ps mostly, these kind of things on this page of Finviz. But we're gonna jump to this page of Finviz. Oh wow, what do we have? DTC. Oh yeah, digital gold. Thing that no one ever believed in. That's founded by a guy no one knows, but has one of the best track records in history, 14 years of performance without a failure. Wow. Never did ever Ledger say no. If you want to understand BTC more, within the perspective of government and larger operations, then definitely check out Lynn Alden. Lynn Alden has I think she's Bitcoin savvy. But she understands this thing very well, and she puts it very well into perspective. Lynn also has a great explanatory video of how the ledgers work and Bitcoin works and why we need it. So I think her video, it's on YouTube, that little 30-minute presentation it's gold mine. You absolutely have to check it out. I think she added a lot to the narrative, but remember that Bitcoin just had a conference. And I know that from Robert Schiller's perspective, this conference was big because this conference had Trump in it. And Trump is a phenomenon. From narrative economics perspective, Trump did something that Schiller describes as a super cycle of a narrative. That is when the narrative comes completely from an underground, like Trump did, because he was we didn't know much about him until we saw him slowly emerging as an apprentice, and that character game that started, and everyone saw, oh, that's who Trump is. So starting with that, straight from an underground, the guy went and became a president. And there was a little bit of slow down with his narrative. If he just came to Bitcoin conference and talked about it, some people would believe him, some people would not. It would largely depend on their political stance. But however, the guy was attempted to get shot, and that is very important. If you try to get shot, if you are being fired at, your narrative goes up, okay? If you're being fired at and you're about to become a president, oof, and you attach yourself to any narrative, in our case it is Bitcoin, this thing will go up. It will inevitably break this level, okay? 19 million of them has already, I don't know how many, maybe even closer to 20 million has already been mined. One of the most popular guys who supports this is a Sailor. Sailor has a good narrative, but it's a standalone narrative. He's I don't have anything against him, he's a great guy, but it's a standalone narrative. He doesn't walk entangled with anything. But Trump entangling himself with Bitcoin makes this thing very bullish. Very bullish. In short and long term, this is inevitably gonna see 100k, because anything that's scarce in this world goes up in value if a lot of people need it. So Bitcoin, very important. However, how do we know, does the thing go up or down on Bitcoin? Okay. This is my personal observation. I've seen it in the last 4 years. I don't know if anyone else noticed, but imagine you are in a storm and you're standing at the seashore, and you see two flags in front of you. One's a small flag, very, very, very small little flag hanging, and the other flag is hundreds of square feet or square meters in surface area, okay? And the wind starts blowing. Which flag will move first? Yes, it's gonna be the small one. Now, small flag could be a good indicator, not a necessary one, but a good indicator of a storm coming. If you've never seen that flag moving, it's moving a little bit right now. It's something. In my personal observation, this flag has been XRP. Yes, weird. Yes, I know. Who the fuck needs this? Needs this asset? However, As somebody who invested in XRP 2020, I've had some time to watch it relative to other currencies, and this baby performs differently to everyone else. Doesn't matter where it is, doesn't matter where it's going. All that matters is what it is doing in right now, in the now. In the now, it's rising. I always use it as a flag for the entire rest of the crypto market. If XRP is unabashedly trying to go up, we are definitely gonna see some bullish patterns on BTC. This is just me. Yeah, BTC is an interesting market. If you wanna see some technicals about BTC, definitely check Trade Pro on YouTube. He has excellent view on the market, especially crypto market, the way he sees BTC, the way he constructs things, and he just has the guy has a good experience. And besides the experience and the man is just a text, but there's a context. Okay, the context is a character, and that man has a very calm, revised character. I trust his word. I'm gonna roll with him. When I see his predictions or like assumptions, I definitely take them into consideration. Especially he taught me what is a supply funding ratio of Bitcoin. Very interesting factor. So give a look at that. And what else is important about BTC? Oh well, let me see. What is important is 3 months ago or 4 months ago, me and my trading partner, we gave a presentation on BTC to an investor, which looks like this. And this is one of the slides, yeah. And I tried to generalize where we're going with the BTC in this market, and the trend was uncanny and obvious. So you can print screen this for yourself if you want to, but we're at this stage, with the ETF approval and all that funding coming, and this was yet anticipated in February, March, April. This was still anticipated, but now it is a reality, right? Every RFK and Trump both came out and said that we will embrace Bitcoin. We want to do them as a strategic. We want to put it in a strategic, whatever that is, strategic reserve, what or whatnot. However, are they early or are they late? If you see that news and you go, oh, that's great, we're gonna have BTC in strategic reserve, who said other countries weren't buying it? And most importantly, in order to understand if this is true, one of you has to answer a question: who is Mr. 100? Once you know who is Mr. 100, or you research about him, you'll understand what I mean. The player of that size doesn't come out of nowhere. And the player of that size has a lot of currency to exchange for the coin. And I think this is exactly the case. And that player has started accumulating ever since the corporate buybacks came. Which means ever since a lot of money appeared on the market. Which means it's a very liquidity driven procedure, okay? In order to understand liquidity, you need one chart. That's a chart from Michael Howell. It's escaping me what company he's working for, but yeah, Michael Howell. Check the Global Liquidity Index, okay? It's also part of our presentation that we're giving to our investor that unfortunately did not invest in us. So yeah, hit me up if you want to invest in BTC and you're around London. But look at this narrative. Look at MicroStrategy going accurately, Michael Saylor doing his job, and BlackRock waking up, just to wake up, okay? This is all driven by global liquidity. And global liquidity in our case is exactly like breathing, exactly like universe. It's an exchange. It breathes in, breathes out, breathes in, breathes out. And the sine wave, thanks to mathematicians, is a beautiful, beautiful approximation of where we are with liquidity. And as you can see, right now we're on absolute rise. We're tracking back to 1970. Let's assume 50 years of data is enough, okay? And just stick to this graph until it doesn't work. Now, okay, this is pretty much all I wanted to say about the markets and Bitcoin. Maybe to summarize, best thing is to watch S&P, okay? But in order to understand where the major market goes and whether there is enough liquidity in it, you must watch an asset that represents liquidity, but only in the case when liquidity goes up. So it's a semi-trustworthy liquid asset. What would that asset be? That asset would be exactly, it would be Bitcoin. These guys have too much money, okay? They have too much money. They take their profits. They don't know where to put it. It's rolling. Powell is printing. Whatever is happening, there is liquidity, okay? When liquidity comes and you have nowhere to spend the money, you as an addict want to spend the money. Why? Because you're a participant in the market. And markets are short-term voting machine and long-term weighing machine. So when you have a lot of money, you vote with your pocket. And you vote when there's too much, this thing will go up if this thing goes up now, okay? And BTC goes up only if there's an excess liquidity in the system. This is something called dollar milkshake theory. Check it out. Which basically means there's too much froth, and froth comes off the top and goes into BTC. And I follow BTC by looking at XRP, at this little crypto asset, or maybe not so little actually, this asset that does not go in tandem with the rest. So, you know, the relationship is not like 1-to-1. However, it does have indication. You could prove me wrong, run some tests, I don't know. This is just 4 or 5 years of observing, and this flag definitely shows where this flag is going, and this flag definitely shows where this flag is going, okay? Waving. All right. I guess, yeah, that's it for today. Thank you very much for joining in. And again, if by any chance, I don't know, something happens, you hit your head, you're in London, and you have extra cash, I would love to collaborate with you and start a little day trading fund. I trade only penny stocks, only micro and nano caps, only $1 to $10, nothing else. That's my golden goose, guys. And yeah, without further ado, hit me up, DM me if you have any questions, and stay sharp, stay healthy, and I will come back to my initial slide so you have my info. And thank you very much.
That's the way you do it. You play the guitar on the MTV. That ain't working. That's the way you do it. way. Now that ain't working, that's the way you do it. Let me tell you.